Hello everyone and welcome back. In today's special weekend edition of the show, we'll be taking a look at the stock, commodity and crypto markets and the key levels and news that you need to be watching. We've basically had a bit of an up and down week. Mostly it was turning off a huge rally, but is that rally about to return for the month of April? Well, it seems that it may be likely, and one of the hints, the smart money. Let's take a look at where the smart money is for the week ahead, plus some other big news. See you soon. Well, welcome back everybody to our special weekend edition. Obviously, the best place for us to start here is to talk about the big news that came out Friday, the jobs number. Every single first week of the month, we get the jobs number coming out of the US. So March employment report, 431,000 jobs added, 3.6% unemployment rate, so a really great unemployment rate for the US economy, and the market didn't really move too heavily either way. Let's take a look at what actually happened in the biggest market of the world, and that is the US. So it was a week that could be forgotten by some. If you're in semiconductors, it wasn't so good, neither was it for banks. But with splits on Tesla, we went up 7.32%, and as we correctly called it on this channel, through the community, we knew that Apple was starting to get a little bit too hot for itself. And after the Wednesday session, it was selling off. So pretty much Wednesday, Thursday, and Friday, it was having a little bit of decline. If we talk about the Friday session though, and we go into indices, what really occurred? Well, it was on for the smaller stocks. Again, this is something that we're really focusing on for the month of April. IWM, the Russell 2000, the small cap lifeblood of the US market, was up, while the rest of the big markets were taking a breather. NASDAQ, S&P 500, and Dow. Why was this? Well, it was a mixture of things, but really it was just a bit of a movement into things that have been beaten down or defensives. Gold was up 2.97%. IBB, the biotech, we'll take a look at that later, was up 2.12%. And then we had metals and mining, utilities, water, all of these more defensive or beaten down stocks having the best session. So we mentioned smart money. What's that doing right now? Well, this is very interesting. Look at this major index combined hedger positions, and you'll notice they're heavily in calls. Basically, these hedges are not just a little bit, they're really bullish for this next month, or maybe even longer. I mean, if you're looking at the difference in terms of their decline, they've gone straight into the positive here, and that's an incredible turnaround for them. So I think it's something that we should be paying attention to, and we've got some other great charts to really discuss this. First thing is first, look at bonds. Bond inflow actually occurring again. Very rare. It hasn't happened all the way through this year. Suddenly, with the risk on, we see movement back into the bonds. And I think this is an interesting point because we have inversion in some of the charts. And this is being created by a member of our Discord community. Make sure you jump into the public Discord community as well. If you haven't, come in and join the crowd. Obviously, everyone talks about some really great stuff. Got some great major contributors there. And we do have a private one if you're interested in our new private shows during the week. But let's talk about here the 3-month and the 10-year and the 2-year and the 10-year yield inversions. So everyone's talking about this one right now. Now, the stats say that on average, after yield inversion, about 14 months later, average, that we get a recession in the US. Okay, that's what the stats say. Sometimes it doesn't happen though. You'll notice here in 98, 71, during a high inflation period, it didn't occur. A lot of people argue that the 3-month versus 10-year is a better indicator, and it happened in pretty much all of these similar times. We go back here a little bit deeper in the data, and you'll notice again, it does show these really decent recession times. It obviously called it in March of 19, it called it in January of 06, it called it in the dot-com boom. All of these periods, 89, etc., we usually did get some form of recession afterwards. And you'll notice that this is another one that people bring up. Now, do you need to freak out about that right now? Well, that's the difference. What is it telling you? It's telling you something's wrong and we need to pay attention to it. But very rarely does the market actually falter straight away. In fact, the percentage after that occurs can be very, very nice. In fact, it's got a very high average percentage after it inverts in terms of positive. So we're coming into the strongest month of the year, or one of them. 15 of the past 16 years have been positive, 93.8% of the time, and some pretty damn good returns. April is known to be good in the markets. Sometimes it's a little bit shaky at the beginning, as you can see here, the first couple of trading days, so that's something we'll be watching. But as we go into Good Friday, as we go into that holiday weekend and all of those types of things, we tend to see large runs that then could be shaky at the end of the month when we go into earnings for the US and everything else. That's at least the theory that we're going for on this channel. Why? Well, I guess seasonality would point towards that. We won't stick on this chart for too long, but if you have a quick pause and you look at it, take a look at all these midterm years and what occurs at the end of April. Interesting, yeah? Definitely subscribe if you're interested in this kind of data, by the way, because we do share it all the time, and we're really looking at making one of the best communities, which it already is, on YouTube for traders, investors, and everybody that's interested in macro, TA, and a bit of fundamentals thrown in. So US 2-year versus 10-year, there's the inversion. It happened this week finally. And, well, it's locked in stone. That is a full-on inversion. The 3-month versus the 10-year, well, that's nowhere near because, of course, that's the close rate. So this will be something that a lot of traders and investors will be watching now over the next year. We've got the first canary. Do we get a second one? We'll have to find out very, very soon. Let's talk about the VIX, though. What's going on there? Well, the VIX is sitting around 20. So this is often known as the fear index for anyone that doesn't know. If it's above 20, it's usually a fearful bearish style market. If it's below 20, it's usually more of a swing trader, technical kind of very easy to trade in comparison market to the upside. Right now, we're sitting on the critical point, and that's leading into a week of FOMC and other big bits of news. We've also got gold here. So if we take a look at gold, what's occurring there? Now, we did see that the market was actually buying gold stocks, yet gold wasn't really moving that heavily. Interesting. However, when you think about it, it went parabolic, it's fallen down, and then it's finding a base. Now, if you're a gold trader, what occurred on the Thursday session? A long leg doji, a high, a low, an open, and a close. We're still within that range. We haven't made a decision down, and we haven't made a decision bullish either. It's basically like a double bottom at this point, but with no breakout. Is this going to be a key level for the week ahead? You would have to think around that 1962 is a key technical resistance that needs to be watched, plus the long leg doji leading in. And for the support side, if you're a gold bear, I mean, you couldn't get a better level than 2 buy weeks. Imagine if that closed below. That would be very negative towards gold. So I think it's pretty clear here what we're looking for. Obviously, we've taken this distance. If you take that, it proofs back to that 78.6 fib, which is what we've been targeting off the retracement. We'll find out whether that occurs. Now, where things get a little bit more unclear was what happened, of course, with oil. And again, I'll say congratulations, community. You guys picked this perfectly. So not only did it go parabolic, which we certainly talked a lot about here on the channel, and we definitely warned against it. Remember when everyone was so hot on oil to $250, $300, we were like, no way, that's not going to happen. Why? Because it doesn't make sense. And it was just complete FOMO. Then it crashed a lot. Then it retraced, and we thought that it would retrace exactly into this area. And we specifically talked about the 61.8 fib being the mid zone. That's exactly where it got to. Now you've got Biden opening up the oil barrels, though it's still only about 5% of the US daily use in terms of how much barrels he's actually releasing. But you've also got just talks in general that are declining oil or at least keeping it down. It's a bit muddy here, I think, and it's tough to trade technically. So we'll definitely come back to it over the week, but I think that right now, a little bit tough. Maybe you disagree with me. Let me know in the comments down below. I'm always interested in your opinions, guys. So here's Tesla. Is this a flag forming? Some people will say. Well, it certainly could be. And if the market chooses to go bullish straight away, Tesla is positioned because of the stock split and the general FOMO to potentially create some crazy options over the next week ahead. It's had a little bit of a sleep. It's got this long leg doji on the 4-hour, and it's got potential here of a flag, which could cause, some real ruckus in terms of how much higher it goes. I think a lot of it is really just about if it breaks the 1,110. If it does so, you would consider the idea of participation to the 1,200 level from a technical level. This is 1,110 to the 1,200 level. That's just basically an open area. Why? Because there's very little structure on the left-hand side. In terms of the decline, where does it go to? Maybe 1,000 if it does go down. Why? Big buy level there. A lot of psychological buys have happened off 1,000 in the past for Tesla. It makes sense. It's traded predominantly by retail traders. And if it breaks underneath there, we've still got that 945, 950 as a key zone. So Tesla is really trapped. I think you're going to need to be looking at options for this week, and we'll bring that into our Monday analysis once we get a clearer picture of where the reality is going. But there's some of the key levels we're watching. Now, Apple was a bit of a conundrum last week. We had 11 days up, and it just made sense that it would weaken. But take a look at the Friday action. Now, this is where maybe we don't get as much pullback as we had hoped for, because Apple went bearish, then reversed, and ended up being a bullish hammer, or at least a pin bar. Now, if we get follow through from that, it's going to be hard to ignore. So around that 175, I think Monday day traders and Tuesday people will be watching, because this is a pin bar. I mean, basically the essence of a hammer or pin bar is that it's gone to a level, buyers have bought it back up, sellers have lost commitment, and then we move towards, ideally, a follow-through momentum. And the key is the momentum follow-through. So an interesting candle here for Apple. Let's move over to the weekly, take a look at that in comparison. And this is where things get a little bit random, because not so much on Apple, but it's certainly on the S&P 500, is that a rejection candle. These are the fights that we've got. So I think Apple's not as clear. You know where we're looking in terms of the clearer support, that 38.2 fib and the previous supports. It's a key zone, but that 175 here, it's going to be key for the Monday. So we saw some risk on in a asset class that has been hated for a while. That is biotechnology, usually susceptible heavily to yields. In fact, if yields are going up, not really great for the old bio, and that's why it's been going down so much. But has this formed a base? Well, some people would say this is a little flag here, and it's broken through that flag. So here's the distance of the pole. Obviously, that's pointing towards a closure up. We've also got a downward trend here on IBB that hasn't been broken through. But if it did, look at this. Previous resistance becomes resistance again. So biotech was really the story of Friday, I think, in terms of the biggest movements. And if you go and have a look at some of the biotech stocks, a lot of them were forming interesting levels that may be worthwhile going and checking out and bringing in your own concepts into. Obviously, you need to make your own decisions there. Let's talk about DAX. So this is one of the canaries that we have in the stock market. We know that the DAX, or the European markets in general, are quite susceptible to the Ukraine, the Russian stuff, everything that's going on there. And what does this mean? Well, basically we had a Wyckoff here. We correctly called it on the channel. Again, congratulations to everybody here. We did it together. And this Wyckoff caused us to know, or at least suspect, that there was going to be weakness in the European market in comparison to the US, and this was actually one of our lead indicators. I still think it's worth having on the charts for the week. Let's take a look at actually how it closed weekly wise, and you'll notice again this big rejection candle here. So for bears, where are they going to be looking at it? We like to look at both sides. Well, they're going to be really focused in on this 14,300 level, because if you get follow through off a rejection off a 20 and a 50 move, plus it's gone back up to this heavy support, becoming a resistance, is that a negative sign for markets across the world? You would suspect it certainly could be, and it may flow on to the US as well. Obviously, this will drop more in comparison to the US at the moment, at least in how we're seeing it conceptually. But yeah, follow through would be important. Now, if it went up and closed above this, wow, that's a complete reversal. So for the week, that's the way we're looking at the DAX. Never discount the power of money flow across the world. IWM, now this is where things get a little bit more exciting for the US. The resistance here becoming support, 2050, and it does look like it kind of wants to move up. Now, IWM doesn't give you the best signals in the world. We've seen a lot of false signals out of this market, but it does show you health of the economy. And this was another one that's Wyckoffing, and another one that's really important, that if it breaches through here, it kind of proves that idea of risk on for April. So certainly continue watching IWM. We will be here on the channel. XLY, consumer discretionary. 1/3 of the US economy is, of course, consumerism. So when you have 1/3 and you're thinking about whether risk on or risk off, at this stage, still a little bit of risk off here in the Friday session. You'll notice it was down a little bit. If it comes down to these levels, I think we've got to pay attention. Why? We've got previous supports becoming resistance, 38.2 fib, 2050 moving average exponentials, all sitting on the same level. Very important, and could be a pretty big level of support for buyers if it occurs in the first couple of days. And then, of course, we'd be hoping for the movement up. What about the big major indices, though? Before we get into the crypto market, let's talk about these major indices. The NASDAQ to start with. So weakness has happened. Let's have a look at the weekly candle here. So the weekly candle kind of looks like that DAX, yeah? Could it be a rejection off these highs? A lot of people are going to be talking about this, 15,200. So we need to go back to that other idea. The smart money seems to be quite bullish, at least with the slightly delayed data that we have. They were correct so far. April is a bullish month. So if we get pullback down to some key levels, 38.2 fib or even a little bit more, would that be met by buyer demand? There's a good chance it would be. Are traders going to be looking for new lows this week to show that weakness to the levels? I think so. Look at that rejection. It's a fairly big deal. And if it breaks to the upside, man, risk must be on, because at that point, you're talking about big follow through. I mean, you're going through the resistance. It's a big deal. You're breaching, you're going towards 15.6, which is previous support, and then maybe even going to the actual previous highs for the month of April. But does it, or is it due a further pullback? Does it want to come back to these moving averages, the 20 and the 50, or even a little bit lower? Around this level makes a lot of sense. And if it can do it, we're going to need to be paying attention to this, and of course subscribe, because we will be covering these particular markets and looking at the structure of the technical analysis as we go along. Let's now talk about the SPY. So the SPY is similar. It dropped back after having a new peak off these highs, and it's similar to the other one. Basically, a pullback may still occur, or a little bit more could come down here. If we take a look at the 4 hour, what were we hoping for? Well, anywhere between, actually, we'll go to the daily here. I think it's probably better. So let's go to the daily. The daily here shows so many moving averages. Now, the buy wick was similar to Apple here. The bullish hammer came straight back out. So on Monday, are we going to see further rally through and a continuation? And that's all we got in terms of the pullback. Very shallow, only the 23.6 fib, but it seriously could be all we got. Or will we see a new low? Now, if it forms a new low, then we're talking 38.2 or even the 50 fib. In this area becomes the most technical levels for us to go with, the 44.50, the 4400. Very interesting where that market could go. But I think the close was really more about maximum pain. So remember this, 454. Let's have a look at max pain. Max pain for the week, the best money area, and this just shows you the manipulation in the options market, for the market to close was 454 for the SPY. If it closed there, all of the options, or at least a lot of the options, were going to expire worthless, and they were going to make the most amount of money from selling premium. Pretty dodge, yeah? And that's unfortunately what does occur. If we take a look at the 8th, it's 450 for this week. So does that mean a choppy week? Does that mean we go up, down, all around? It's more of a scalper day trader market. That's what the options so far are telling us, and we'll certainly be looking back on this a little bit later on throughout the sessions, because this is where the clarity needs to come in. Let's now talk about the crypto market. This one was much, much easier. Basically, it just came straight back down to this previous point of resistance, and bam, there it was. Absolute reckoning. Look at that. Bitcoin just straight out. And we've really been on board with this Bitcoin idea. The Bitcoin has been improving. It's been looking way better on the charts, and it still does. Will Bitcoin break through 48,000 this week in the 200 daily? If it does, well, it's looking quite bullish, and the next stop for it is actually 52K, previous resistance over here. So yeah, Bitcoin very strong. Obviously, 20 moving average, everything was in, the stars were aligning, the 38.2. I haven't moved anything here on the charts. Look at that level. Wow. Wow is all I have to say. Not very often you sit there and you go, yes, but that certainly was a great technical level, and it came in with the great principles that we teach here. If you're interested in those principles, you can jump over to fxevolution.com, and we do have a sale on our courses, mentoring package, etc. at the moment if you're interested. Let's move over to why Bitcoin's doing so well. Well, the shorts are out. That means that the big whales are not interested at the moment in going against the trend. They like the trend being up, at least from the data that's coming through. It makes sense to the technicals that we're seeing. And on top of that, we're being really good on Ethereum here. So Ethereum has actually held even better than Bitcoin. Bitcoin looks really beautiful on the charts, don't get me wrong. But Ethereum is about to make a new high. It's very close here, going into the weekend, going into a period of time where cryptos tend to like to go bullish. And a lot of this was thanks to reading FBTC, Ethereum, Bitcoin, and look at the breakout, just perfect. So It's still undervalued a little bit in terms of the way that we see it from a technical perspective, and that's just going from these highs. The potential there is undervaluement, I guess, and that's just because from this point you expect it to be able to get up to here if there is risk on in these markets. This is just from a ratio, and remember, ratios are something you can bring into your analysis. Certainly very cool how ETH is looking stronger than Bitcoin at this stage. If you haven't followed us on FX Evolution on Twitter, definitely consider doing so. And remember, the week ahead, we've got ISM Services PMI coming out 10 a.m. Tuesday, April the 5th, New York time. Then we've got the FOMC meeting minutes. Can we just stop this already? We don't even want these meeting minutes, do we, guys? None of us want this. It sucks whenever they do this because it always creates that fear and that annoying volatility. Some people like it. I tend to not like it. It's like earnings sometimes. If you're a trader, you don't like it. So that's on Wednesday, April 6th at 2 p.m. That'll be a big one. And then really, that's the main kind of big bits of news for the week ahead. So thanks so much for watching. If you've enjoyed the video, remember to subscribe, smash that like button, join us in Discord, join us on Twitter, and of course, we hope that you have the best of trading and investing weeks for the week ahead. See you very soon. Bye for now.